Good morning, capitalists. Here is everything you should know today. Trump demands Powell cuts rates as Iran war surges oil prices. High oil prices cause market drama, but drilling stays flat. Palantir AI gives the West an edge in Middle East war. U.S. launches forced labor probes on 60 economies. McDonald's launches $3 items, $4 meals in value push. Here's today's markets and assets update, brought to you by the Wellness Company. The Dow is at 46,691.14, up just 0.03%. The S&P 500 is at 6,656.83, down 0.24%. The Nasdaq slipped to 22,210.27, losing 0.46%. Volatility eased slightly. The CBOE-VIX fell 0.37% to 27.19, though it remains elevated. On the commodities side, gold gave back some ground, dropping 1.05% to $5,073.30. Silver took a bigger hit, falling 4.52% to $81.35. Bitcoin was the standout, climbing 3.10% to $72,507. Let's dive right in. There's a lot happening right now that's shaking markets, policy, and even everyday consumer decisions. First up, President Trump is putting direct pressure on the Federal Reserve. On March 12, 2026, he urged Fed Chair Jerome Powell to cut interest rates immediately. This comes as the escalating U.S.-Israel conflict with Iran has driven oil prices above $100 per barrel for the first time since 2022. Trump posted on Truth Social, calling Powell too late and tying the Fed's delays to economic damage from rising energy costs tied to the conflict risks, particularly around the Strait of Hormuz. Gasoline and diesel prices are surging fast, which is pinching consumers and adding fresh inflation pressures that the Fed watches very closely. This isn't new territory. Trump, who nominated Powell back in 2017, has long pushed for rates as low as 1%. Powell, for his part, keeps stressing that decisions are data-driven, not political, even as White House tensions simmer. Adding to the strain, federal prosecutors, under Trump's direction, are investigating Powell over his testimony on Fed headquarters renovations, something Powell has described as unprecedented pressure on the central bank. All of this is ahead of the March 17th FOMC meeting. Meanwhile, those high oil prices are rippling through markets. WTI and Brent have surged to around $94 to $95 per barrel on geopolitical risk premiums from the Iran situation and potential Strait of Hormuz disruptions. Global markets have gone into sell-offs as a result. But here's the interesting part. Energy companies aren't rushing to boost drilling. Major players like Exxon and Chevron are sticking to long-term conservative outlooks and balance sheet discipline. They're using decade-long price assumptions rather than reacting to short-term volatility, preferring to hedge instead of ramping up activity. New production takes years to come online anyway, and forward curves are already pricing in Brent below $70 and WTI below $65 by 2030, expecting post-war oversupply of 1 to 3 million barrels per day. Analysts don't see a near-term drilling boom, even with these elevated prices, because companies are weighing those billion-dollar commitments against more moderate long-term forecasts. Shifting to the conflict itself, Palantir CEO Alex Karp made some strong comments on March 12, 2026. He said the company's AI platforms are giving the U.S. and its allies a critical lethal and coordination advantage in the Middle East against Iran. Karp highlighted America's unique AI-driven edge in warfare, with Palantir's software enabling real-time data linking and coordination among U.S. and regional partners who've been hit by Iranian attacks. He pointed to Project Maven, the AI surveillance tool that uses satellite imagery, as a backbone for operations with rapid expansion among allies. Interestingly, Iran recently bombed Amazon data centers in the Middle East, underscoring how digital assets and tech infrastructure are now direct targets in modern conflict. Speaking at AIPCon 9, Karp called adversaries evil but not stupid, and defended Palantir's role in providing unique security products for alliance coordination amid these escalating threats. On the trade front, the U.S. Trade Representative launched Section 301 investigations on March 13, 2026, into 60 countries, including China, the EU, India, and Mexico, over failures to ban forced labor goods. The probes are assessing impacts on American workers and tie into the broader Trump trade agenda. This follows recent excess capacity investigations into 16 economies. USTR's Jameson Greer pointed out the widespread failure to block these abhorrent practices, despite international consensus, and how it's threatening U.S. businesses and labor. The timing is notable, coming before any potential Trump-C meeting and amid Supreme Court considerations on tariff limits. Some experts are calling the timelines unrealistic and worry it could dilute focus on China. If unfair practices are found, new tariffs could follow, building on the first-term use of Section 301 against China and the EU. Finally, a bit of consumer news to close out. McDonald's is rolling out McValue 2.0 starting in April 2026, bringing back fixed low prices to address affordability complaints after years of post-pandemic price hikes. The new menu includes $3 items like 4-piece McNuggets, sausage biscuit for $3 or less, and $4 breakfast meals. Think McMuffin with hash brown and coffee combos. It's aimed at price-sensitive customers, especially lower-income and millennial diners who voiced frustration on social media comparing today's prices to 1990s levels. Prior value promotions have driven sales gains, and CEO Chris Kempczynski emphasized protecting value leadership while aligning with franchisees to meet customer needs in this inflationary environment. That's the rundown for today. Markets are navigating geopolitics, policy pressures, and consumer shifts all at once. We'll keep watching how these play out. You now know more than most people do about what is going on in the world of finance today. Thank you for listening to The Capitalist and supporting us. Together we will make capitalism great again.